was saying in my introductory comments, I mean, we're pretty sanguine about where we are from an investment cycle standpoint. I mean, I think arguably capital flows are extremely strong. They could be less strong, and that might be better for us. Apropos of that, we actually encourage higher interest rates because we think that would be a better environment for us from an investing standpoint. But you know, the underlying economy, notwithstanding how strong the capital flows are, still quite fragile. So you have to worry about, in our opinion, unemployment, potential social unrest that you've seen in other parts of the world as a result of unemployment, and the corresponding political risk, particularly if you're investing outside the U.S.
I would say one of the things that keeps me awake at night is the pace of technological change. And you might say, well, what does that really have to do with real estate? And the interesting thing is a lot. I think where it's been most evident so far is probably big box retailing. So anything that's generic and destination oriented that can be bought on the internet is increasingly being bought on the internet. And those, those types of real estate boxes may just become obsolete. And that's just the beginning. So I think if when you're buying in a market like New York City where we are today, and you're buying what I'll call experiential street retail on Fifth Avenue, in Soho, in Times Square, you don't worry about what technological change is going to do. But in so many other areas, B and C malls, which some people consider an opportunity, I think those things may become extinct. But the one that worries me, and I think David touched on it in the panel before, but nobody really answered the question, what happens if people don't want to go work in typical office buildings? Or if the workspace that they desire is very different than the 400 million square feet of space that currently exists in New York today. As you're buying new buildings at $1 billion to $2 billion a clip for a big building, to have to ask the question, does this building have the risk in potentially not a very long period of time, and that gets to the rate of change of the technological change, is this building going to be obsolete? That's a little scary, and I don't think the answer to that question is necessarily clear that it can't happen.